Gold is at all-time highs. Uranium prices have hit 16-year highs, and cocoa prices, of all things, soared to their highest level in 46 years. The questions are now, will commodity prices continue on this tear? And what's the next big trade in the commodity space? Well, with me today is Alan Knuckman. Alan cut his teeth working as a desk clerk for the Chicago Board of Trade, where he ran buy and sell orders to traders in the pits. Eventually, Alan became a pit trader himself, putting himself right in the middle of the action. And today, he is joining us from the Chicago Board of Options Exchange. Alan, welcome back to the Paradigm Profits channel.
Doing well, thank you.
All right, well, let's do this. You cut your teeth in the commodities markets many, many years ago. And so I just wanted to know, what do you see going on in the commodities market that has your attention right now?
Well, number one, I'm an opportunity guy. So I'll recognize and want to take advantage of any opportunity that exists, up, down, sideways. I'm not biased. I want to take advantage of where I think has the best risk reward. And with the stock market at all-time highs and continuing to rally run, it's a much more selective game up here, obviously. But I think in the commodities sector, it all comes back to commodities, as I said to you many, many times before. It's simply supply demand. It's something people can understand. But commodities in general are about half of what they were in 2008. So I'm of a belief that a commodity supercycle has started with a lot of room to run.
Well, all right. So commodities, we talking silver, we talking gold, we talking copper. What else is on your radar? Give us a trade. Or give us something that you're looking at that we might be able to trade.
Sure. When it comes to the markets, you have to understand the commodities markets. Maybe you may not be trading them directly, but for any investing, you have to understand what's happening with interest rates, what's happening with oil, what's happening with gold. This all has an impact because the commodities are the building blocks of the financial markets. So while you may not be directly trading commodities, you're aware and you use that to make your investment decisions. And it's truly governed by supply demand. That we grow the crop is the demand for the crop. So it's something that is a little bit more tangible and easier to understand than a stock, which is only valued, whatever people are willing to pay for that piece of paper. But I think people are coming full circle and they're understanding how important commodities are in these opportunities in the commodities markets.
Yeah, and when we're ever like the argument right now or the discussion a lot of people are having is about inflation in the economy.
Right.
And so when there's inflation in the economy, prices of everything goes up, and that's very true of commodities as well. So
Yep.
What's your favorite play right now that you're looking into for our viewers?
Well, when it comes to commodities, we've seen cocoa of all commodities have the biggest move of the year. It's gone from a very low level up to 10,000. And just looking to see where it had been historically, back in the 70s, cocoa prices were at their highs for the time. But if you adjust that price for inflation, they had to get to 5,000. Well, guess what? They got to 10,000. So that's a perfect example of what I'm talking about, how prices, yes, they've moved up, but they're still cheap in comparison. If you take the 1980 high in gold and you adjust it for inflation, you'd have to hit 2,700. So gold still has not technically, in my mind, made to all-time highs. Now, gold is continuing to run, but I think there's better risk reward in so many other commodities. I love silver. Silver hit $50 in 2011. If you adjust that for inflation, I would have to hit 69, and we're about halfway there. So there's a lot of upside. Crude oil I have to hit 197 if you adjust the 2008 high for inflation. Now, crude oil has been the one commodity in this almost everything bull market that hasn't moved yet, and potential means that it just hasn't happened yet. It has a lot of potential.
Well, you mentioned in the green room here prior to this call that you really were looking at natural gas. Can you talk about your trade there?
Well, natural gas is going to be a big player, obviously, with what's happening with AI. And I trade what I see. I don't trade what I think, but what I see is an incredible opportunity from a risk-reward standpoint. Natural gas is about 85% off its 2022 top. Yeah. And it's set up in an amazing way. One thing that I want to point out to our viewers here is how the ETFs, exchange traded funds, have revolutionized the stock market. You can trade commodities in your stock account by trading ETFs that track copper, that track natural gas, that track crude oil. So that's a more efficient way to trade in your stock account. So the ETF that tracks natural gas, UNG, is set up very, very well for another move. If you look, natural gas right now is below $3. We were at $10 just in 2022. We were at $15 in 2006. So there's a lot of upside potential. And with AI, the demand for electricity is going to be so high. Plus what we've got, warm weather, forecast for the summer, cold winters, so forth. This is going to put a little bit more demand on electricity. And I think this is a sector that hasn't participated yet.
This 3-month chart, it certainly is up off, it's $4 off recent lows over the last few months.
Right. It started, but back up a little bit. When in doubt, zoom out. So zoom out and take a look and see how this is just a baby bottom. This is a baby bounce off the bottom if you look at this. Yep. And so there's a lot of upside. And like I always keep saying here about the risk reward, there's more upside potential in my mind from a trading standpoint. A limited risk trading standpoint is the way I position myself in the markets. I position myself for success, and I get myself enough time to be right. So, natural gas, like I said, there's so many variables that at play in this everything bull market. I like the fact that it hasn't rallied significantly yet. Yeah, we bounced off the bottom, but there's still a lot more upside to go.
All right. Well, you always say that options are a better way to trade.
Yes.
You have less capital at risk, and there's more upside if you do catch the bottom. So I'm looking at this right now, this thing is at $18. If I were to buy 100 shares of this, that's $1,800.
Right.
What options are you looking at? How far out are you going for expiration? And what is your target for UNG?
Well, people consider me a trader, but I do not. I consider myself a boring investor that just happens to use options as my trading vehicle because of the probability factors and the limited risk. So like you said, it would take $1,800 to buy, and you have got, the risk down to zero for that ETF. Now, what I look at it is in the money options that act like this stock. So it's a very, very basic stock substitution strategy. I'm not trying to be the smart guy. I'm just looking for an option, an inexpensive option, a limited risk option that's going to act like the stock. So what I'm looking at here is I'm looking at a $15 call. $15 calls trading for about 5 or so. It's deep in the money. And you can see that January option is the duration I'm looking for to try and take time out of the equation. A lot's going to happen between now and January. You want to buy more time than you need just in case. But I've got plenty of time for bullish development here. And if we just go back to January 2024, you can see that this was at 25. So if you back up a bit, you can see that if this was at 25, so my $15 call, if the ETF just gets back to the 25 level, that option will gain 100%.
Okay, so I'm just going to zoom in real quick just so everyone understands. Here's the 3-month chart. You're buying strike price $15. You've got that's about 7 months, 8 months or so of time that you're buying for $5, which is $500 risk capital. And if we hit 25, we double our money. Is that about right?
Right. We hit 25, and right now it's already $3 or so in the money. So it's deep in the money. It has real value, giving yourself the right to be long from 15. Now, I could also put in an order and say, listen, I want to buy when it gets to 15, but instead I'm going to use an in-the-money option. And I have limited risk. I can ride through ups and downs. And I call these lifestyle options because I don't have to watch the markets minute by minute. I'm not a trader. I'm an investor using options to position for success and to gain from the high probability plays with the risk reward and what our expectations are for natural gas to move to the upside as we see everything in this bull market play catch up.
Alan, I love the trade. Thank you very much for your time. And I love the energy sector myself personally. So thank you very much for that.
Thank you.
And thanks for everyone tuning into the Paradigm Profits channel. If you liked what you saw today, we're going to be doing this more and more every single week. Hit the subscribe button and it will alert you when we have a new episode available. Till then, happy trading, and we'll see you next time.